Good morning, everyone. We're going to get started. Prior to the start of the meeting, yesterday the Standing Elections Committee met with the candidates for District 2. We had 3 initial applications for the directorship of District 2. One candidate withdrew. The second candidate was from an association outside of District 2 and therefore wasn't eligible to run. The third candidate was certified as a candidate. Because there was only one candidate that was actually available to run, there will be no election, and that candidate basically has assumed the position of director of District 2, and I would like to introduce him because he's assumed his position on the board immediately, so we fill it, and that is Al Lynch. And Al, if you would stand up, and congratulations and welcome to the board. And therefore, I would like to have Mabel do roll call.
Acadia. Acadia. Absent. Acadia 2.
Present by proxy.
Andover A. Andover A.
Absent.
A. Absent. Andover D. Absent.
No, they're here in person.
They're here first. So again,
I'm sorry, I was mixed up. I thought we were doing proxies now.
So I'm calling the association that's not here.
Okay.
So double check. Do you want me to go again?
Nope, go ahead.
Okay. Andover D. Absent. Andover E. Absent. Andover F.
By proxy.
Andover G. Absent. Andover H. Absent. Andover I.
Present by proxy.
Bedford A.
Present by proxy.
Bedford B. Absent. Bedford C.
Present by proxy.
Bedford D. Absent. Bedford F. Absent. Bedford G.
Present by proxy.
Bedford H.
Present by proxy.
Bedford J. Absent. Cambridge A.
Present by proxy.
Cambridge B.
Present by proxy.
Cambridge C.
Present by proxy.
Cambridge E.
Present by proxy.
Cambridge F. Absent. Cambridge H. Absent. Cambridge I. Absent. Cambridge J. Absent. Cambridge L. Absent. Cambridge M.
Present by proxy.
Canton Court D.
Present by proxy.
Devonshire.
Present by proxy.
Dorchester A.
Present by proxy.
Dorchester B.
Present by proxy.
Dorchester C.
Present by proxy.
Dorchester D.
Present by proxy.
Edinburgh, absent. Fairborn,
Present by proxy.
Fairfield A,
Present by proxy.
Fairfield B,
Present by proxy.
Fairfield C,
Present by proxy.
Fairfield D,
Present by proxy.
Fairfield E,
Present by proxy.
Fairfield F, absent. Fairfield G, absent. Fairfield H,
Present by proxy.
Gloucester A,
Present by proxy.
Gloucester C, absent. Gloucester D,
Present by proxy.
Gloucester E,
Present by proxy.
Gloucester F,
Present by proxy.
Gloucester G, absent. Gloucester H, absent. Gloucester J,
Present by proxy.
Gloucester K,
Present by proxy.
Gloucester M,
Present by proxy.
Gloucester N,
Present by proxy.
Gloucester P,
Present by proxy.
Grantham, absent. Highgate B,
No, A is present A, Highgate A.
Highgate B.
I'm here.
Right,
Are you
she
here?
came in person, but you didn't say Highgate A. There's a proxy.
Highgate is a proxy, okay.
Highgate A, present by proxy.
Highgate B, in person.
She's here in person.
Present. Highgate D,
Present by proxy.
Highgate E, absent. Highgate F,
Present by proxy.
Highgate 2,
Present by proxy.
Highgate 3, absent. Highgate 4,
Present by proxy.
Huntington, absent. Idlewood,
Wait a minute, oh, okay. Right. Present by proxy.
Inverness, absent. Noel Swan, absent. Knowles 2, absent. Knowles 3, absent. Lancaster 1, absent. Lancaster 2,
Present by proxy.
Lancaster 3,
Present by proxy.
Lancaster 4, absent. Lyndhurst, absent. Manchester 1, absent. Manchester 3,
Present by proxy.
Manchester 4,
Present by proxy.
Maplewood,
Present by proxy.
Nantucket 1,
Present by proxy.
Nantucket 2, absent. You got Nantucket 2.
She didn't check in, you know. I didn't know she was on.
Nantucket 5, absent. Oakley Green,
Present.
last name, sir?
Wasco.
Wasco, for Oakley Green.
Yeah, you checked in.
No, I didn't check.
Did you get Nantucket 3?
Yes.
Nantucket 4? Nantucket 4 is here.
Right, that's why we didn't call you, we did, because you checked in.
Nantucket 5 is absent.
Absent.
Nantucket 5, absent.
And Oakley Green's here, Oxford's here.
Yes. Oxford 2,
Present by proxy.
Portsmouth, absent. Again, Portsmouth, absent. Princeton,
Present by proxy.
Quail Pass,
Present by proxy.
Radisson 1,
Present by proxy.
Radisson 2,
Present by proxy.
Richmond,
Present by proxy.
Somerset,
Absent. Oh,
absent. Tremont 2,
what about? Okay. Present by proxy.
Villeroy,
Present by proxy.
Worlington,
Present by proxy.
Yorkshire, absent. Mr. President, you have 68.9% represented with 3,809 units with 76 associations. You have a quorum.
And I call the meeting to order, and before we rise for pledge allegiance, it is a requirement that all attendees to this meeting wear their mask unless speaking. So if you do not have your mask on, would you please wear your mask for the meeting unless you are speaking? Will we please rise for pledge allegiance? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. As this is a special meeting, the only thing is on the agenda, and the only thing that can be discussed is the insurance. The information has been sent out to all the presidents, and I would like a motion to approve the insurance as proposed by the board. Thank you, Vicki. Can I have a second? I believe that's Eileen in the back. Eileen Pico is the second. We'll open it up to discussion, and I believe before we take any questions from the audience is last night at approximately 4 p.m., Adam Lopatin, who is our agent for the insurance company, received some additional questions. And Adam, you have a mic there, and I will turn the meeting over to you to answer the questions that were submitted to you late yesterday afternoon.
Thank you, Mr. President. Good morning. Nice to see everybody again. I am President, USI Insurance Services. For those that don't know me, we are your insurance professional. I run the condo division for USI Insurance Services. Brian and I work on your account. Around 4 o'clock yesterday afternoon, we did get an email from Eileen Pico in reference to in Acadia 2, Kensington, Nantucket 2, and Oxford 1, and I'd like to read the questions and answer them because there are some good questions. So the title is Insurance Discussion Questions for Federation's Special Membership Meeting on April 9, 2021. Below are some questions for discussions and explanation by USI, our insurance agent. While we expect the association's insurance policies will be approved, some member presidents need clarification about the changes in levels of coverage, deductibles, and elimination of policies. Thank you for addressing these questions at the upcoming meeting. The first question, regarding the directors and officers coverage, will these new policies follow the current policy in place? The answer to that is yes. Does individual policy each association is purchasing continue to have the same coverage under the umbrella with the Federation? The answer is the coverage that we are replacing is actually broader coverage than we currently have. As we've explained, just so we can clarify, currently right now, we have all 114 entities insured through Travelers Insurance, and we're sharing a $2 million limit among all 114 entities, and defense costs erode the $2 million limit. Travelers is non-renewing this policy due to recent claims activity. We are now worked a program through Aspen Insurance. Every entity will now have its own policy that we've negotiated on a bulk contract with a limit of $1 million specific to each board member or each association board, and defense costs do not erode the limit. Therefore, you have unlimited defense costs. So technically speaking, you now have $114 million of coverage with unlimited defense costs versus your current program of $2 million, where defense costs are inside that limit, shared among 114 entities. If one policy gets canceled, how will that affect the other association's policies? If one policy, let's say one association has multiple claims, then that policy will be reviewed on a standalone basis. We will obviously use the leverage of all 114 to try to get the carrier to stay on it. But if that policy gets non-renewed, then we'd have to move that to a new carrier, just like we did Travelers. But it would be on an individual basis instead of a group policy, but still negotiated as a bulk contract. The second question, heritage coverage. Can you explain why the heritage property carrier premium has gone up $504,000 over last year? Market conditions are what we call a hard market. Rates are going up on good accounts 20 to 30%. A recent article that Jack was kind enough to share with me on April 7th in the Tampa Bay Times talks about property insurance companies. They tend for, last year with no hurricanes, these carriers have lost $1.6 billion in losses. So when carriers are not profitable, reinsurance costs are going up, and insurance companies are going out of business, this drives the marketplace up. That being said, we were able to negotiate for you all an increase of 19%, and the only change in coverage is our deductible was increased from $2,500 to $5,000, which was the same as was through AMCAP. Also, for those of you, I think I've said this before, AMCAP, who was our previous carrier, is going out of business. They're insolvent, and they'll be in liquidation, and they will be no longer. So, luckily for us, the insurance committee and us have been meeting since January and working on these bids, and we had all the bids finalized and negotiated in early February, because since February, rates have continued to increase because of the marketplace, and now because of AMCAP going out of business, that's $400 million of property coverage that has to be replaced by the current carriers, and they don't have the capacity. So we are very fortunate to only have an 18% increase through Heritage with the same coverages, and only the deductible increase from $25 to $500. Some of the things that Heritage wanted to do away with that we were able to negotiate back on a bulk contract was they wanted any roofs older than 15 years not to have replacement cost coverage, only actual cash value, which would be terrible for those older buildings, because that means basically if your roof was blown off, you would get cost new, less depreciation, and a 15-year roof, that would be basically zero. We were able to get them to stick on replacement costs for every roof, regardless of how old it is. They wanted to take away sinkhole coverage and get us ground collapse coverage. We're able to do that. So we are very fortunate to be able to negotiate your contract at a bulk process through Heritage at the timing we did. Building values remained the same. That's correct. By Florida Statute 718-111, we're required to have an appraisal every 36 months, not every year. We had an appraisal done with the last 13 months, which is by Florida law. Typically, Heritage applies a 2% inflation guard to their policy. We actually got them to waive that, because if they would have applied that 2% inflation guard, our values would have gone up 2%, and it would have cost us an additional $80,000 in premium. So that was another thing that we were able to negotiate through Heritage, and no co-insurance on this policy, agreed value. All their deductibles, the deductibles went from $2,500 to $5,000, which would suggest a reduction in premium. Again, based on market conditions, we are seeing rate increases anywhere from 20 to 30%. What would have been the difference in premium if we maintained the same level of coverage? They did not offer a $2,500 deductible. It was either $5,000 or nothing. There is no mention of the carport coverage being carved out and applied only to the units within the carports. Is the premium cost appropriately passed on only to them? Yes. Third bullet point. In an increasingly litigious environment, our umbrella coverage has dropped from $100 million to $25 million over the 2-year period. Please explain this risk to the community, and it is the recommendation of the USI as our agent. For example, since the pandemic coverage was dropped last year, will the general liability coverage cover COVID-19 lawsuits? As the market hardens, umbrella limits have decreased and coverages have increased dramatically. So based on my experience over the past 25 years, I've never had an umbrella pierced in a condo ever. And the cost, when we looked at the $50 and $75 and $100 million umbrella, and taking into consideration that everybody now has their own standalone $1 million limit, we thought it was prudent, based on cost and experience, to reduce that coverage to $25 million umbrella instead of $50 million last year. For example, since pandemic coverage was dropped last year, so under the current policy, there is no pandemic exclusion. The new policy through Aspen will have a pandemic exclusion, and the governor just passed a law that basically says as long as you are not in gross negligence, no one can sue due to COVID-19. So we're pretty comfortable with that. When will each member association receive a risk assessment so we can determine the financial risk implications of our associations and advise our unit owners of their potential out-of-pocket risks as they purchase their HO6 policies? Every association will get a letter after 4/15. I would say give us 30 days. That letter will be able to be distributed to all the homeowners. It will tell each homeowner, based on your deductible, what their out-of-pocket hurricane expense would be, and then they can go back to their insurance professionals and see if they can buy additional loss assessment coverage for that. In addition to premium increases, we have increased new deductibles for the fiscal year 2019 and 2020. We had no deductible for the general liability coverage. Now we have a $1,000 deductible. Has any financial analysis done to support the true costs and changes in the coverage for the associations? So currently, right now, on our policies, we have a $1,000 deductible for bodily injury and property damage through Aspen, and the renewal is a $1,000 deductible. In 2019 and 2020, that is correct, we did not have a deductible, but Aspen insisted on applying a $1,000 deductible to that policy. The last bullet point. It appears we may be insuring based on previous budget estimate rather than doing a comprehensive risk assessment based on current conditions and bringing the results of the assessment to the member association for review. Please explain how your recommendations determine the current insurance coverage being proposed today. I think you're referring to replacement costs there, and I think I've already covered that, but replacement costs by Florida statute must be determined by an appraisal every 36 months, and we meet that guideline. As far as other coverages or doing a risk assessment of our current overall insurance program, the current insurance committee and us meet frequently, and we go over new risks and old risks and constantly evaluate our coverages versus expenses. Thank you for your clarification regarding your questions. We look forward to hearing about future plans and benefits USI will be bringing to our association in 2021. Also, I'd just like to cover a couple of other items real quickly. If you look at our general liability costs on a per door basis, right now through Aspen, we are paying $41 per door for general liability insurance annually on a bulk contract. Most of our accounts that have 0 losses, which we don't have, are paying $75 to $100 per unit. So you can see, based on our bulk negotiating with Aspen, we were getting a significant reduction in premium through them with a great policy. Also, if you looked at the property rate that you're currently paying right now, we are considered old joisted masonry buildings. Our property rate is 42 cents per $100 of property value. So if you took the overall premium and divided it by $816 million, you'd come up with 42 cents. Right now, in the current market conditions, we are seeing rates of 52 cents for newer joisted masonry buildings. If you looked at that 52 cents and you applied it to the value, we are receiving $830,000 of savings compared to what most of your people are paying in newer JM buildings. I think I'll turn it over to you, Mr. President.
To Eileen and the associations who asked, did Adam answer your questions? Mike,
Most of them are the same, but I still
could you
think,
go to the mic? Eileen, you're satisfied with his answers?
Yes.
Is Jane Narden here?
I think he, well, I think he answered most of the questions. The only thing, I think that there needs to be a risk assessment, and just so that it knows, because no one on the board or the insurance people would know what the community has for risk. And I just think it needs to be known to all the communities what the possible outlay could be for them. That way they can make an informed decision, and if the majority vote for something, then we all have to second it. But everybody needs to know what that risk is.
And Adam, you are providing that risk assessment, is that correct?
Just to confirm, Mike, the risk assessment you're referring to is the deductible for the hurricane?
That along with, there are other ones on there, but there's a total risk assessment that just needs to be done, and to see whether the individual associations can afford to have that risk. We don't have a lot of pocket money in there. We don't even pay for our insurance policy in full, we finance it. So they're not a big, deep hole for a pocket. I just think that ought to be known to people of what could happen if we have a significant storm. Just as of last night, they've also increased the hurricane prediction to be a major event this year. That's all.
Who was the other association? There was Oxford one, there was Kensington, and
Arcadia too.
Arcadia too.
Arcadia.
Acadia too. Is Acadia here? Just to cover what Adam was discussing regarding the increase in deductible from $2,500 to $5,000. The Federation does have an insurance fund, and the insurance funds covers everything except $5, whether that deductible is $2,500 or whether that deductible is $5,000. The association, Federation, covers when you submit your claim. They cover basically everything but the $500. You submit an application to the insurance committee, and the insurance committee approves it, and you are reimbursed for everything of $500 deductible, and that's the way it has been for years. So I just wanted to clarify that basically last year we continued, even though it went down to $2,500, we continued to pay everything but the first $500, and we will continue, if I'm correct, Janice is head of the insurance committee, will continue next year to pay everything to $500. So there, although the deductible increased, the impact to the individual association basically is nil, because we will be paying the same thing we always have.
One other thing I would like to mention is Brian and I are available to come to any board meetings that you all would like to have us, and we will go over that risk assessment with all your unit owners and clarify what their out-of-pocket would be due to a hurricane, and talk to them about how they can go to their homeowner's professional and try to increase that loss assessment coverage. So feel free to reach out to us via email or my cell phone anytime you have a question. And again, if you want us to attend your individual board meeting, we'd be more than happy to do that.
Now, I have had conversations, and I know Janice has, with Adam regarding the impact of AMCAP going into liquidation. The impact of AMCAP going into liquidation and the time that is signed by the state insurance, whoever AMCAP has insured in the past has approximately 30 days to obtain a new carrier, which is putting more pressure on the insurance industry, which is raising the rates because other carriers are now have a greater liability for what the value of the property they're insuring. Is that correct?
That's right. So, for instance, most insurance professionals are moving their current clients as soon as possible from AMCAP to a new company because they want to get the return premium, and they don't want to have to be with. If they have a loss currently right now, AMCAP is not capable of paying that loss, so they have to go through what is called the Florida Insurance Guarantee Act, and the process to get a claim paid through that act is very cumbersome. That being said, for example, like Jack said, Heritage, who is your current carrier, has put a moratorium on writing any new AMCAP business because they don't have enough reinsurance, and they're not the only ones. So as this $400 million of premium influx back to the remaining carriers, they're going to have capacity issues, and either those people are going to, it's going to put more pressure on the rate, or they're going to have to go to Citizens. So, and AMCAP's not the only, AMCAP's going out of business, but you have Everest, who is pulling out of the state, ICAT, who is limiting their capacity, Lexington is pulling out of the state of Florida, Weston is going to be pulling out or going to be having financial difficulty. The average combined ratio of these Florida companies is 117. That means for every dollar they take in a premium, they're paying out $117. And their return on investment, which has to be conservative, is basically zero because no one's making any interest. So either they're going out of business or having to raise rates significantly because the Florida, and that we didn't even have a hurricane last year. So.
As you said, that's without a hurricane striking the state of Florida last year.
Not one hit us.
That there was 1.6 billion in that article. Is that correct?
1.6 billion, and the combined ratios last year of 117 over versus basically 17. One would be breaking even.
The other question I have for Keith is you had sent out an email for the association presidents to stop in and sign the D&O application. Do you have all those D&O applications signed?
We have all but two, so we should be getting both of those today.
They both will be signed today? Because if a president doesn't sign or a board member doesn't sign that application, Adam, correct me if I'm wrong, you can't file an application for D&O policy unless you have that application. And those associations, if they don't sign the application, you can't file it, they would be without D&O insurance?
That's correct, and they're claims made policies as well, not occurrence. So it's critical that we have every application signed. Coverage expires at 12:01 a.m. on the 14th, so we don't have the 15th. The drop dead date is the 14th. Obviously, we want to get coverage bound today or Monday, but we need those applications completed and signed. So for those two remaining associations, please get with Keith and get that to us ASAP, or you will not have directors and officers coverage. Therefore, you'll be personally liable.
And you are required by state statute to have D&O insurance, correct?
I don't know if the state requires it, but I think if you look at the bylaws
The
probably.
bylaws most
Yes.
likely require.
That's correct. That's
Okay.
correct.
Any other discussion?
Oakley Green, Kurt Wasco. I believe the statutes require that the officers would be bonded. Is that the same as the DNO?
No, that's it, no. Fidelity, the Florida statute requires every association to carry a fidelity bond that equals the maximum amount of cash and reserves that association would have during the 12-month period, and the Federation has that. That's a different coverage than your DNO coverage.
Okay, so that is covered.
That is covered, that is correct.
Okay, just a clarification, there seems to be a lot of confusion, at least for me. I just had a unit owner add a $20,000 lanai extension. How is that structure covered?
So if that structure is unique to that unit and not like the originally built building, they would need to cover that under their homeowner's policy.
So they need to add a rider to their HO6 then to cover this?
That's correct.
I don't think anybody's been doing that.
We've talked about this before, and if you came to the homeowners seminars that we had, that was discussed as well. Any unique modification made to your unit it has to be covered by your homeowners association. I beg your personal policy.
One of the unit owners said to me that, well, the fact that my square footage increased, then that automatically covers it.
No,
I don't think so.
that's incorrect.
So I need to be telling all my unit owners that have extended lanais, they need to get additional coverage.
That's correct.
Okay, that's fine. Because I know in our documents, it says that if their structure adds to our insurance costs, they are to pay the difference. But we're not going to insure their additions, so they have to do it.
That's correct.
All right, thank you very much for that explanation.
No problem.
You can leave it on, you have a person behind.
Wait a minute, sir, what was your association? We didn't get it.
Oakley Green?
Thank you.
Teresa Galarte, Nantucket 4. I'm not really clear on the hurricane insurance as to what, what liability the residents might have. When you were mentioning they may want to increase their own policy.
Yeah, so nothing has changed with the hurricane deductible. It's the same as you currently have now. It's a 5% hurricane deductible, 5% applied to the building value that is damaged, and we will send a letter out that will take for your specific association outlining if you have 100 units and the maximum assessment due to a hurricane would be $1,000. It will say that in the letter, and again, if you want me to come to your board meeting, we're more than happy to discuss that.
Okay, so you're saying that extra money you were just talking about, they would have to get a policy to cover that?
So they should have a HO6 or a homeowner's policy. Under that homeowner's policy, by state statute, there's a $2,000 loss assessment coverage included in that policy. That if you have an assessment due to a covered cause of loss or a hurricane, and that assessment is $1,500, and they have an HO6 policy that covers wind, then their HO6 policy will cover up to the first $1,500 or $2,000. You can increase that loss assessment with some carriers. So the idea of the letter is to let everybody know what their maximum out-of-pocket expense would be, worst case scenario to a hurricane, so they're okay with it. And if they want to, they can go to their homeowner's professional and get that increased.
Perfect, thank you very much.
No problem.
I think Adam has offered that if an individual association wants to discuss with the members, that you'd be glad to attend and discuss the HO6 policy and the need for it. Am I correct?
Absolutely, and we've done one already and it went really well. So we again, that's part of the services we're going to provide for free. Anybody wants us to come to a board meeting and discuss the liabilities, call me, email me, and give me 30 days till we get the letter out and get everything bound up, and we will definitely do that, not a problem.
Yes, sir. Could you identify yourself and your association?
Yes, Richard Resnick, Manchester 4. Real quick question on hurricane. God forbid this should happen, but last year Louisiana saw 2 hurricanes go in within a few miles of each other. So is that 2 insured events and therefore the deductible would apply twice, or is it once per year?
That's a great question. So luckily for us, part of our negotiations was that we negotiated a calendar year hurricane deductible. Now, I'm not going to get too technical here, but there's all different types of deductibles. There's a per occurrence deductible, and that would mean if we got hit by multiple hurricanes, that deductible would be start new after every event. Our deductible is a calendar year deductible. So once we meet that percent deductible in a calendar year, that's it. We wouldn't be subject to any other deductible.
So it's not a per occurrence,
It's a calendar year. It's not a per occurrence, it's a calendar year.
Any other discussion? Then Marvell, I'd like to call the question, take the roll call for the vote.
Acadia 2,
Yes.
Andover B,
Yes.
Andover C, Andover F,
Yes.
Andover I,
Yes.
Bedford A,
Yes.
Bedford C,
Yes.
Bedford E, Bedford G,
Yes.
Bedford H,
Yes.
Brookfield,
Yes.
Cambridge A,
Yes.
Cambridge B, Cambridge C,
Yes.
Cambridge E,
Yes.
Cambridge K,
Okay.
Cambridge M,
Yes.
Canton Court D,
Yes. Yes.
Corinth,
Yes.
Dorchester A,
What about Devonshire?
oh, sorry, I just skipped, Devonshire,
Yes.
Dorchester A,
Yes.
Dorchester B,
Yes.
Dorchester C,
Yes.
Dorchester D,
Yes.
Fairborn,
Yes.
Fairfield A,
Yes.
Fairfield B,
Yes.
Fairfield C,
Yes.
Fairfield D,
Yes.
Fairfield E,
Yes.
Fairfield H,
Yes.
Gloucester A,
Yes.
Gloucester B, Gloucester B,
Yes.
okay, sorry. Gloucester D,
Yes.
Gloucester E,
Yes.
Gloucester F,
Yes.
Gloucester J,
Yes.
Gloucester K,
No.
Gloucester L. You said yes, sir? Sorry. Gloucester M,
Yes.
Gloucester N,
Yes. Okay.
Gloucester P,
Yes.
Highgate A,
Yes.
Highgate B,
Yes.
Highgate C,
Yes.
Highgate D,
Yes.
Highgate F,
Yes.
Highgate 2,
Yes.
Highgate 4,
Yes.
Idlewood,
Yes.
Jameson,
Yes.
Kensington, sorry, Miss Eileen.
Yes.
Lancaster 2,
Yes.
Lancaster 3,
Yes.
Manchester 2,
Yes.
Manchester 3,
Yes.
Manchester 4,
Yes.
Maplewood,
Yes.
Nantucket 1,
Yes.
Nantucket 2,
Yes.
Nantucket 3,
Yes.
Nantucket 4. Yes. Oakley Green,
Yes.
Oxford 1,
Yes.
Oxford 2,
Yes.
Princeton,
Yes.
Quail Pass,
Yes.
Radisson 1,
Yes.
Radisson 2,
Yes.
Richmond,
Yes.
Southampton 1.
Yes. No.
Again, Southampton 1,
No.
Southampton 2,
Yes.
Tremont 1,
Yes.
Tremont 2,
Yes.
Villeroy,
Yes.
Worlington.
Yes.
Mr. President, you have a count of yes with 3,729 votes with 97.19% with 74 association, and 80 counts voted no with 2.1% with 2 association. We got a yes vote of 3,729 with 97.9% with 74 associations, with a no votes of 80 units with 2.1% with 2 associations.
Before we adjourn the meeting, I have found out, being president of doing insurance is not one of the greatest tasks in the world, and it takes a lot of time and effort. I spent a great deal of time with Janice and Alan on the phone, trying to get answers. I think I told Adam at one time I had to accept a 1% increase, not a 2%, and he kind of laughed at me. But I would personally like to thank Adam and Brian for the work you have done in securing insurance in a very difficult time in the marketplace for the residents of Kings Point. And Janice, I'm going to ask you to pick up your mic. Janice is the chair of the insurance committee, and she and she has worked diligently on this insurance, but I would like you to take a minute to advise who is on your committee from the community and who has worked diligently along with you and Adam, because they should be thanked for the work they have put into it. It has not been an easy time over the last few months.
Yes, I have Ray Hunsacker here, excuse me, and Trina Schwartz, along with Bill Robb, who was not able to make it, and Martin Lambert. And together that makes up our insurance committee, and we have worked, as Jack said, extremely hard. I'm very pleased and thankful that this passed. And I really want to thank Adam and Brian again for all of the work, and Jack. You really filled in a lot of times when I was clueless, so.
As I said to you, I learned more about insurance than I ever wanted to know.
Last year I had black hair. I don't know what happened.
I was 6 foot tall, so. With the passment of the insurance, we can all breathe a little easier that we all have coverage for the next year, and I appreciate the support of the members of the Federation. And with that, I will take a motion to adjourn. Vicki, thank you. In a second. Any objection? Seeing no objection, the meeting is adjourned. Thank you all.